let me also welcome our experts on the show today. We do have Arpit Beriwal with us and Kapil Shah, technical analyst at MK Global Financial Services, is also with us. A very good morning, gentlemen, and thank you so much for your time. And Arpit, firstly, help us understand what do you make of the market and where do you see the expiry happening today?
Yeah, the broader market and the benchmark index. So Nifty have on the technically on the weekly scale has negative the formation of lower highs after almost 6 to 7 weeks. And from last couple of days, we see a flat or gap up opening. But the good part is that buying interest is visible at the lower levels. Looking at the option data for the expiry perspective, 25,100 as the maximum call rating and put writing. And looking at the overall stance, our stance is that Nifty is likely to close near above 25,100 level, 20 or 20 points up or minus. But 25,000 will act as a major support, and our stance is that till Nifty holds above, closes above 25,000, we can see a move towards 25,250, 25,300 in the coming week, as next will be the monthly expiry. Now talking about the Bank Nifty, so Bank Nifty has been overall consolidating in a broader range of 500 points. So Bank Nifty has been also negative formation of lower highs after almost 5 to 6 weeks, but Bank Nifty got stuck in a range between 500 points in between 55,600 to 56,250 levels. And our sense is that till Bank Nifty also holds up a 55,555, our stance would be positive. But technically, Nifty is more outperforming compared to Bank Nifty. So our stance would be more bullish on Nifty going forward for the coming week as well.
All right, so stance will be more bullish on Nifty and Nifty Bank that is still holding on to some gains right now. But along with that, Kapil, what's your take on Reliance? Because that big boy is indeed lending some support to the benchmark indices, up over 1% right now. What are the charts telling you?
Yes, so first of all, good afternoon to everyone. So Reliance has witnessed a kind of a very steep decline from the 1,500 to 1,3560 level around. And with this particular fall, the index has come close to its in previous days. It is also retesting the 200-day moving average where its slope has improved on the high side. And after some sorts of a time consolidation in the range of 1,400 to 1,360 level, the stock has started to pick up some sorts of momentum. So that is indicating some sorts of a positive buildup is happening. So we are maintaining the bullish stand in this. And in a very shorter term perspective, we can see that from a 1,230 level, the stock can inch up to the 1,465 to 1,470 level.
All right, so that's the take coming in on Reliance right now. Let's watch out for that. Yes, after that steep fall, the stock in a slow and staggered manner is seeing some bit of an up move. But Sunny, what do you believe is helping in fueling the rally in the pharma counters? What we are getting to see is that the sector is emerging out of the bit of an underperformance we have seen off late, or any fresh triggers are perking up for the pharma space right now?
Yeah, so coming to pharma sector, I think time and again there has been headwind in terms of likely tariff imposition by US, and that has led to a kind of underperformance as far as pharma sector is concerned. But within pharma, if you look at a selective space like CDMO companies, they have reported a decent set of number of late, and we believe the future continue to remain very good for all these CDMO based players. So whether it is the companies like Bluejet Healthcare, or for them matter Sai Life Science, Shilpa Medicare. So I think mid-sized pharma companies is a place to be in. Even from a frontline counter, we have seen a decent set of number by companies like Lupin and Cipla. Again, there if somebody is looking for kind of a 12 to 13% kind of CAGR return, those that companies will remain in focus. I think the pharma again, it's a long-term structural story, and I don't think so there should be any significant impact or a possibility of tariff by US, because again it's a very basic necessity in US, and time and again it's not possible that you can ship the entire manufacturing facility from India to US in a span of 6 or 8 months. It's a kind of very long-term process. And anyway, India in the entire value chain is at a very lower end of the price band. So most of the products which are sold in US are basically generic product. And again, there the possibility of cost reduction is very negligible. So I think, again, I think any uncertainty because of this trade tariff is a good opportunity to accumulate a pharma counter from a medium to long-term perspective.
So that's the take coming in on the pharma sector. Look out for opportunities and start accumulating. But Sunny, with this, we let you go on that. Thank you so much for taking the time out and speaking with us.